you, Paul. Hi, everyone. Once again, it's my pleasure to see your faces and smiling faces, and that's really good. Despite the fact that we are all in this together, still we have positive perspectives, and I believe that our mood is in positive way. So as just Pat said, that we should move forward and we should look only on the positive side of this situation. So what I would like to ask you, just some technical part. Those who is not in the panel and who is not speaking, just please mute your mics in order not to make any kind of echoes or noises during the panel discussion. Secondly, I cannot activate the chat part through my access. I guess I should have been registered somewhere somehow. I'm not very familiar with the team, so sorry.
Let's leave that for Christy to intervene there, Constantine. Okay, she'll monitor the chat and let you know verbally, I guess. Okay.
Super. So that's what I would like to ask to Christy if there will be any comments or questions. So we will have it afterwards, after the main panel discussion. So my name is Konstantin Saroyan. I'm a Secretary General of the Federation of Eurasian Stock Exchanges. Before joining FEAS, I have been for more than 6 years CEO of Nasdaq OMX Armenia and part of Nasdaq OMX. And now I'm more like in this kind of job, a generalist, let's say, let's put it this way. So our today's panel will be about performance, and we will focus on the performance not only through Q3 and compare it to Q2, but also we will pick some moments, some period which relate to Q1, because we would like to discuss the performance and the actions taken by the exchanges on the panel, exchanges also participating here during our conference, taken throughout this whole situation related to COVID-19 and lockdown. So let me introduce our panel. Today we have Dennis Wang from TIFEX. Denise.
Hi. I'm here.
Hi, Denise. Denise joined TIFEX in 1997, and she's now the head of business development department, responsible for product development, international affairs, as well as legal counsel. With more than 20 years with the exchange, Denise has been engaged extensively in product design, international cooperation, marketing, as well as strategic alliance, legal opinions for regulations and contractual agreements. Hi, Denise.
Hi.
Next panelist, we have Daniel Kormozi from Budapest Stock Exchange. Daniel is currently responsible for projects and initiatives related to international investors and counterparties of the Budapest Stock Exchange. Previously, he has been Deputy CEO, Director of Marketing and Data Services of Budapest Stock Exchange. He covered with his team international investors, issuers, issuer companies, and market data activities as well. Prior to joining BSE, Daniel has been working at KBC brokerage firm as well as 2 banks. Currently, he is member of the board of directors of Kellers CCP, the Hungarian CCP. I'm sure all of you knows that company, and also chairman of its risk management committee. Hi, Daniel.
Hello, everyone. Good morning, good afternoon, or good evening, depending on your places and time zone.
Thanks. Our third panelist is Rafael Caruana, head of commodities of Johannesburg Stock Exchange. So he joined Johannesburg Stock Exchange since 2012. He has been involved with design and distribution of risk management solutions for the broader agricultural sector. Prior to that, Rafael had spent many years in the financial services industry where he advised institutional clients on investments and risk management. Hi, Rafael.
Hi everyone. I actually like the way you pronounce my surname. Not everybody gets it right, but thanks.
Yeah, I worked on that. Thanks. Okay, so let's jump to the topic. Before I will address questions to our panelists, I would say that early this year, that was again in Q2, we at FEAS Secretariat has performed a survey on the actions taken by stock exchanges, regulators, and also related organizations to the capital markets. So what were their activities, what they have done in terms of when the situation became as we had, like with this COVID-19, the lockdown, and all this financial markets downturn. We have, and I want to present to you a couple of statistics and things which probably will be interesting for you. So we asked and collected the information from 100 exchanges, 32 regulators, and 34 other types of organizations like CSDs, clearinghouses, IFIs, etc. So we have distributed the actions taken by these organizations in 4 major groups. So market-related actions, operations-related actions, messages and communication, and support from the exchanges side and from those organizations side. So, of course, the biggest part was on the market actions and operations, where we saw that many exchanges, when it comes to the operational part, has moved their day-by-day activities into the remote working from home. Some of the exchanges, they even ceased their activities for a short period of time. The others has changed the way how they have been managing the business processes. So there has been some kind of a rotation in the schedules, working schedules of the employees, and all this kind of stuff. I'm sure most of you has been performing these types of actions. I'm not going into details about that. And probably our today's panelists will share with us what they have done during that period. And the third part was messages and communication, how the exchanges and organizations communicated with the market and with the stakeholders, and of course support. What support has been provided from those exchanges. So these were 4 major areas done by the exchanges and capital market related institutions to take a reaction on this COVID-19 situation. So as it started from Asia, and by the way, we have now during our panel 3 panelists from 3 different continents. So it's Asia, Europe, and Africa, and this is great, really great. And I would like to start from Asia, basically where it started to come from all over the world. I now look at the figures and see that, for example, Taiwan Stock Exchange. Unfortunately, I do not have a TIFEX results on that, but Taiwan Stock Exchange has during these days has provided and shared the biggest amount of messages, the communication to the market. So it was like 17. So in order to share the information with the stakeholders and to make them prepared for the upcoming changes in the operation side. So now I want to start with Asia, and would like to ask Dennis, can you share with us your feelings, what you had during these days, and what were your actions in general? Probably there can be also some very funny situations happened with you during these days with typeface particularly. Thank you.
Okay. Okay. I think I would like to share with some very surprising numbers we have here for the coronavirus situation in Taiwan. Actually, up to the latest number, we have only 496 confirmed cases and 7 deaths. So in Taiwan, we actually don't have any lockdown in the whole country. What we have is when the outbreak broke, and we having setting up very quick responses by the government, the industry, and all the citizens. So actually in Taiwan, not really big changes for the daily life we have, including the operations of all the exchanges. So
Denise, we cannot hear you.
Okay. Can you hear me now?
Yes.
Yeah, now yes. Denise. So I think till then Dennis will fix, I guess, the problems with the connection. Let's move forward and let's go to Europe actually, and that was Dennis, you are back.
Can I? Did you hear me?
Yes.
Okay.
Yes, please.
Is
Go
it
ahead.
okay now? Okay. In Taiwan, we don't have any lockdown. Up to date, only 496 cases were confirmed for the virus COVID-19. Okay, so in Taiwan, we don't have any lockdown. What we have is we have second office operation at
No, I think Denise has got internet problems.
Yeah, it seems like that.
Yeah. Christy, can you send her a message?
Yeah.
Let's continue our discussion. Dennis, we would like to ask you to fix your communication problems with the internet until we will continue. Yep. Yeah. Let's move forward. Christy, please communicate with Dennis on. Okay, so we will Dennis about the situation in Taiwan and how they deal with the coronavirus. Now, Daniel, can you share with us your experience? So, what was the situation in Hungary and in your daily life? Mics.
Yes. Hello, Konstantin, and hello, everyone. And until Denise gets back, I'll wrap up about Europe and Central Europe specifically. So yeah, I think it's fair to say that Europe has been less fortunate in terms of COVID compared to Taiwan or several other Asian countries, but within Europe, our country, Hungary, and Central Eastern Europe figures and the situation has been moderate and also in terms of COVID, we were one of the luckier countries and the luckier region in terms of number of cases, especially that was true for the spring period and also the summer period. I think now here in the region we are experiencing Central Eastern Europe a second wave, which looks to be worse than actually the first one. So I think peculiar and difficult times might be ahead of us and might be more difficult than the springtime in terms of health situation. But in terms of operations and from the exchange perspective and the financial services perspective, I think it's also fair to say that it was a smooth transition from operational side. So meaning that early in March, the country basically locked down, and the financial services sector went quickly to remote working. Of course, we had a learning curve, you know, how we implemented our systems and communication, where we started with Zoom, and then suddenly Zoom was bad and evil, and then everybody realized, okay, Zoom is not so bad, we can use it. So we had our IT security learning curve, and yeah, you can detect uncertainties also in terms of operations and approaches, whereas I don't know, one American bank, you see that they maximize 20% of their staff in the office for the full year of 2020, whereas another Belgian bank, they say, yeah, we go 100% work in and we focus more on the elderly and the exposed ones. So there are very much, you can see differences in the approaches, how people do remote working, but all in all, in terms of professional operation and in terms of working together as with market participants as an exchange, I think we are let's say business as usual in terms of our operations. So all our departments and all our services are functioning well as an exchange. And we are just for those who are less familiar with Budapest Stock Exchange, we are an equities or cash equities and bond market, and we also have a derivatives, financial derivatives market.
Thanks, Daniel. And what about KYC rules in general in the market? Because I assume that the banks and brokerage firms has also been closed, and they also moved their operations remotely. So how they dealt with the KYC rules and with all this kind of stuff, or they have been already working in online regime even before that?
I think it's they did manage the situation well. At some instances, you could observe where they had to implement sudden rules where in order to onboard new customers and perform due diligence. So you could detect where they had to make participants a minimum amount of change in their operations and to allow more of a remote or not in presence type of identification, for example. But I think what I have seen, that everybody did it in a cautious way, so to make sure that they don't onboard and open accounts for any client which otherwise in a normal circumstances they would not. So I think yes, of course, we will see later on whether this will have any effect on the quality of accounts and onboarding, but I would be surprised if this would have any effect on onboarding and KYC. Maybe I would add that an interesting area of improvement is electronic voting and proxy voting on general meetings of companies. As it turned out, the spring season is a season where we have a lot of companies holding annual general meetings, and we had to realize that Hungary is among the countries where the regulation and also the general practice of companies is less comfortable with the electronic voting. So it was a disadvantage, and it was a conclusion for the market that we have to make steps to improve the environment for electronic voting, and this several difficulties came from the security services industry in relation to this.
Thank you, Daniel. Denise, I guess you are back with better internet, right? You are muted. Please unmute yourself.
Can you hear me?
Yes. Okay, welcome back.
Yes, very pleased, very happy to come back. Let me talk about the situation in Taiwan. In Taiwan, we don't have any lockdown because even up to the latest information yesterday, we only have 496 cases confirmed and 7 deaths. So the operation of daily life here in Taiwan actually is not influenced a lot. And I think it's because our government responding to the virus in the very early stage. And we set up everything, including the system, the health card system. Everyone can be found where he travels and all the symptoms, whatever, and control at airport when they enter the country. And we also have travel ban, everything. So in Taiwan, the exchange set up 2 teams, operation in turns. The 2 teams, the second team work in another office, and everything, including the system, everything is set up in a quite early stage and testing everything. So in Taiwan, we still went to the office and we are asked to wear masks, to have health check every day. So that's the case in Taiwan. So for all the meetings we have changed into online, and no visits and no travels, and everyone follows the rules. So we don't really have many changes here in Taiwan. And to share with you one very, I think I should be say very proud things, that everyone can get a mask only 50 cents. And every other 2 weeks, we can get the mask we want. And everything is under control by the government. That's the case in Taiwan. And for the broker side, they also set up second office. And even the meetings we have with the brokers are online. So even for the KYC, everything can be checked online. That's the case in Taiwan. And one very interesting thing is we are supposed not to contact each other even after the office. But very interesting, we happen to meet each other again after. I remember I bumped into my colleague in the bookstore one day, and we have the joke say that we may be the outbreak of the virus because we talk to each other after the office. So I think in Taiwan, very different from the other countries, even very close to us like Japan and Korea. Here, we don't have any lockdown, including the industry and the exchange. Okay.
Thank you. Thank you, Denise. And what about? So you mentioned that if the normal life or the way of living has not changed significantly in Taiwan, but when it comes to the stock exchange, to your exchange actual operations, so haven't you had before this this COVID-19 situation any physical face-to-face meetings with clients and I'm not sure, but with issuers, with brokers, etc. So how that influenced your business in general? So if you had before any kind of a meetings, physical, where you have been discussing some new projects, etc. So how the situation is now in this regard?
Okay, from I should say in this way, from the very early stage when the virus broke, we set up all the preparatory work in a very early stage. So the teams, the second teams, and the second office actually is I think we had all the set up all the machine testing in 1 week, and we call up all the meetings online. And different from now is we still have the online meetings, and nowadays we don't really let's talk for like the meeting. We now have the face-to-face meeting, but everyone here in the meeting has to wear a mask, have to keep social distance. That's the thing different. And for the operation side, I think the very difficult situation we have is for the IT system, and we have to procure all the system we want in a very quick manner. And I think we have we have the backup offices plan, emergency plan operating every year. So for us, it's not that difficult. And yeah.
Yeah, great. Thank you, Denise. So let's move to Africa, and as this continent has been hit by COVID-19, the latest. So, Rafael, has there been any changes in Johannesburg Stock Exchange in terms of operations? And particularly which relates to the market itself. I mean, on the operational side and business side, before we will jump to the figures discussion and structure discussion.
Yeah. Yeah, no, definitely we have seen a structural change. The good thing that happened with us really was the fact that being in Africa, or let's say in Southern Hemisphere, we were quite fortunate in that we actually managed to observe what was unfolding in other parts of the world, particularly in the European countries. So we had ample time to actually to prepare for the eventual pandemic that was going to be on our shores anytime. So what happened is, I think, a good 3 weeks even before official lockdown was announced by government, we already were doing some drills and dress rehearsals on to test our remote working capabilities and our disaster recoveries and so on. So that helped a lot. Actually, by the time the government actually announced the actual lockdown, it was a very smooth and an effortless exercise for us, because we have already we were prepared for it. So in that case, it worked quite well for us. Of course, we changed everything since then. What we did not anticipate that the lockdown was going to be this long. I think at the time that we were doing the preparations, we thought within 3 weeks we will be back to office or something like that. It has been 6 months down the road, and we are still working remotely from home. We don't foresee us going back to the office, I think, until probably Jan next year. But the fact that we had that preparedness means that our engagement with our clients, all virtual, it's really effortless. Of course, from time to time we would experience latency issues, connectivity issues, just like we're experiencing now. But overall, it has never hampered the course of doing business the way we used to do it. And now I think the efficiencies are the same, if not better, actually, when we're working on remotely. I think also this one has been helped by the way the South African government has responded to the pandemic as well. Maybe also thanks to the fact that we had enough time to prepare ourselves. I think the institutions they put in place, the communication to the country and to corporate South Africa, they took us along. They were listening to experts, what were the best things to do and so on. That helped a lot. And maybe also on a national level, what I can share with you is there was a public partnership where a fund was established called the Solidarity Fund, which is really just there to support the national health response and humanitarian relief to those people that are affected. And it was a call to every institution in the country to actually contribute and support this Solidarity Fund. And what we did at the JSC then was we then decided that we will sacrifice at least 2 days of our settlement fees of our business. 2 days of our proceeds would then go towards this Solidarity Fund. I think that happened somewhere in mid-April. That's when we did that. But it didn't end there. What we also did then was we reached out to our member firms, and then we told them that we are busy taking this initiative. And actually, a lot of our broker members actually joined the exchange to, of course, because it was purely voluntary, where they also felt to contribute to this fund, which we monitor. The kind of work that they do, the life support they do, food stamps need, and so on. So it was really quite a very good, well-coordinated effort. Other actions that we also did as an exchange was also realizing that a lot of our clients were in financial distress or are soon to be in financial distress. So what we did is we also introduced what we call where we extended payment terms of up to 6 months for those broker members that needed that. We also provided discounted trading and clearing fees, to especially the small brokers that needed that. We reduced secondary capital listings fees by up to 25%, also in a way to stimulate liquidity in the market, especially for those that were in need of that. Interestingly, the uptake was not as high as we anticipated, so perhaps the impact was not that bad from our broker members as of now, up until now. But we also took cognizance of our suppliers, for example, the vendors and so on, where especially also the small to medium enterprises that we know, based on this impact of the pandemic, they needed every penny the most. So we instituted accelerated payments, pro rata payments, to allow them at least to be liquid enough to be able to execute and do their work, and not us hampering them and pay them 60 days later, like in the normal course of doing business. So that on the part of recognizing and acknowledging the whole ecosystem that was affected by this coronavirus. I think the one thing, before I conclude, that we also did not realize that much is actually the impact that this would have on our staff working remotely from home. It was a new concept. And initially, everybody was excited, actually, because we were cutting down on transport cost, on time that you take to go to work in traffic and all that. But what we did not realize was actually that, and I don't know how the rest of you who are participating here feel like, but it feels like we are working actually much more when we are at, it's longer working hours. But not only that, now you have got working mothers, while they are in a meeting, the kids are playing around or they're disturbing and so on. So the JSC also came forward and started introducing measures to relieve the staff, actually, where we had mandatory promotion of people to take leave. We introduced things such as your meditation and yoga sessions in between. all sorts of fun stuff to try and relieve the stress. We even lately now introduced, for example, where we said after we were told that the meetings are just these back-to-back meetings are just becoming too many. We now introduce certain days where we call them no meetings Wednesday, for example. And then that day, you just at least attend to yourself, catch up with your emails, catch up with your to-do list, and not be in all these meetings. And I think it has all these have got ripple effects to our client base as well. And so far, the virtual interactions is working very well, and we can't complain.
Thank you, Rafael. Actually, your stock exchange has represented a pure leadership for the market, and as we saw, the actions taken by your exchange was especially very important when it comes to the communication with the market, because as you mentioned, yes, the market participants, despite the fact whether those are financial institutions, they had this lack of information and better understanding what to do next, what to expect, and how to deal with the daily operations and with the business itself. Yes, that's great example of how the exchange should act in the market. I would now go further to our second round of questions and discussions, and it will be related to the change in the structure of the market, change in the performance of the market. But performance, not particularly if we are taking this or that instrument. In general, what you saw during this recent months, how the market changed, were there been any kind of active transactions, where the liquidity was and where we had, for example, the stop in any transaction and this kind of operations. So Daniel, can you share with us how that impact the operations and then financials and also the transactions volume of the Budapest Stock Exchange?
Yes, certainly interesting times are behind us, both in terms of first half of the year and moving into this third quarter as well. I mean, volatility is definitely was the main scene you could experience on Budapest, but also in Central Europe and on European markets in Q1, starting from late Q1, from March when the virus broke out, and also going into most of Q2 until late June. We had very high volumes on our cash equities market and high volatility with high volumes. Later on in the summer, when we moved into the summer, this huge volumes and this volatility calmed down. So it was a very quiet summer after a very hectic spring and early summer. In terms of financials, I think it's and this is true for the investment banking community for Europe, as I saw the figures, but also maybe for Americas, that these high volumes and this high volatility generated extra revenues for the whole industry, whether it's market infrastructure, whether it's markets of investment banks. So I think financially this sector and these players in Europe did well. In terms of primary markets, of course, the situation is much different, because in such an environment, the primary markets slowed down, and I think in general in Europe there was a 40% drop in the volumes of IPOs, and whereas I think only in some Asian countries, in China, there were some decent transactions and good primary market. Of course, in this environment, and also with the difficulties of how do you manage a virtual roadshow and all that, it was obviously down. So that had a negative effect on our markets, absolutely. But we had an IPO. We had an IPO on Budapest Stock Exchange, where we did the bell ringing on a Facebook Live, and we had also a number of bond listings on our bond MTF market. Although I have to know that it's a sponsored, it's a central bank bond program sponsored bond, so it's very attractive for the local corporate sector to list bonds on this MTF, and as a consequence, we had a number of transactions, but I would say it's impacted because of the central bank bond program. And we had no short selling bans. We are one of the markets where we had no bans on short selling. So overall, we have definitely had volatile times behind us, and we'll see how it goes for Q3 and Q4.
Yeah, thank you. So it's good to hear that capital markets life is going on, and so we are overcoming from all this kind of circumstances and situation and moving forward. So that's great to hear that you had IPOs and bond issuances. Denise, that's really interesting to hear from your side, because as you said, so the impact was not so significant when it comes to the COVID-19. So how was the changes? Is there any changes in the structure and performance of your exchange, if we are comparing, of course, Q2, Q3, and this period?
Okay, I think in March, we have a historical high volatility in the futures market. So March, we reached a record high trading volume. And from March to August, actually, the market grows more than 32% compared to last year. And one thing very interesting is, among all our products, we have a mini contracts. Because of the volatility, and we have a huge growth on the mini contract. Now it became the second actively traded contract in TAIEX. And I think it's because the volatility is there. So this mini contract attract small traders into the market that brought up the trading volume of the mini TAIEX contract. And another very interesting thing is, even for the foreign participation, we have a growth for the foreign participation. And another thing is, we actually launched after hours trading a couple of years ago. And this year, the trading volume in the after hour trading increased 60% compared to last year. And also, I think one very interesting is, this year we launched the real-time market data. So all this, the volatility, the mini contract, and the real-time market data in the after-hour trading, the activity that open up the trading volume in TAIEX. So we expect this year we are going to trade over 300 million contract. It will be a record high this year. And even though in April, May, the volatility is not that high, but still the market marks a very active trading volume, particularly compared to last year. So to be very honest, this year TAIEX has a very high earning per share. And we expect the trend continue to grow until the end of this year. So that's what's happening in TAIEX. Okay.
Thank you, Denise. Rafael, As I understand, Johannesburg Stock Exchange has quite different markets. Yes, here you are. Yeah, different markets. So how the structure of those and how the activities and volatility and trading volumes has changed during the period?
Yeah, thanks, Konstantin. I think it's along the same lines as TIFEX, really. We are a multi-asset class exchange. And of course, as you can imagine, the impact of the COVID has affected the different markets slightly differently. But we are by far the largest trading activity happens in the cash equities market, which is north of 65% of the rest of the market. So because they also did quite well, we saw the Johannesburg Stock Exchange really doing quite well. In fact, we just released our interim results 30th of June, which was just released about a month ago, and where we were up 26% on earnings before interest and taxes, and that was because of a very good rally on the cash equities market. The latter half of Q2 saw trading activity slowing down a bit month on month, and that is really just to reflect the normalization of the market volatility, from the elevated levels that we saw in March, April. So March, April, all asset classes really saw double-digit trading volumes, quite very high. But of course, post that, we saw things slowing down a bit, and again, the different asset classes were impacted differently. If you, for example, consider our bonds and interest rate derivatives, volumes there were actually, during the peak of the pandemic, were actually also amplified by sovereign credit ratings downgrade. I don't know whether you are aware where South Africa was actually downgraded by Moody's. And actually that led to a ripple effect of events where South Africa had to exit the WGBI, the World Government Bond Index, and as a result of that, of course, it had an impact on the currency, on the volatility of our local currency. So we saw a lot of that unfolding and happening during that period. Luckily, of course, our government stepped in as well to stabilize the situation by lowering interest rates and injecting liquidity in the bond market. On the commodity side, for example, there it was a combination of the COVID, where we saw a spike March, April, but also it also coincided with very tight stock levels as we were coming to the end of the marketing season, particularly for maize. So the impact there was really almost a double whammy there, both the COVID and the fact that there was a scarcity of maize towards the end of the cycle. But then when we started the new harvesting season, which is starting for maize, which is starting on 1, we are currently actually now in the new season. We saw things slowing down a bit in the first few months, and that saw trading activity being low in May and June. And I think that's also because we had late rains, which led to harvesting coming in very late. We saw deliveries to the grain silos slow in the first few months, and that actually meant that trading activity and deliveries actually slowed down, and that evened out actually in terms of volumes traded towards the end of the first half of the year. And like I said, of course, but luckily because we are primarily driven by the cash equities market, the exchange as a whole perform. Other observations maybe that I can share with you is overall on the listed companies, we saw a decreased net asset values actually of our listed companies. And of course, that also had an impact on the capitalization of the exchange as a result. We also observed lots of cancellations of dividend payments when they fell due. Some were voluntary, some were regulatory, but it was very significant where companies had to actually cancel their dividends payments as a result. We also started seeing flight to quality, actually, where because of the volatility in the local currency, we saw especially a significant increase in the net foreign outflows, where foreigners who were in our market actually do hedge or invest in gold and some other investments. We also saw an increase in increased activity in exotic products, for example, where we saw people investing in EFTs, for example, with a foreign underlying, which is like an SP500, for example, which is rand hedged in that case. So we saw a lot of that. We also saw good performances in some of our resources stocks. Our listed, especially the mining houses, did very well. Our platinum group metals, our iron ores were at an all-time high, and some of those mining houses actually performed very well, and as they were releasing their results of late.
Great.
Yeah.
Yeah, thank you, Rafael. And very briefly, so I'm coming to the last question to three of you and to all our audience, which we'll probably discuss later on, is what is your expectation for the year end? I mean, we have still 3 to 4 months to go. So what are your expectations when it comes to the capital markets and to the markets of Johannes?
Let me start. I can conclude. I saw Denise saying that they foresee the momentum continuing in the second half of the year. We actually don't think that is the case with us. We realize that we are as good as our broker members, and I think the second half of the year, if you see at the impact, the GDP figures for South Africa were just released just recently now for the Q2, and we went down on an annualized basis 51% quarter on quarter. That is really quite significant, and soon it will catch up in terms of the economy and the whole performance of the underlying institutions, financial institutions. So we are seeing a slowing Q2 second half of the year. We are going to expect to see an increased mergers and acquisitions post COVID-19. The other interesting phenomena also that we are observing is an interest now in social impact bonds, investments in the green economies, for example, your ESG factors. People are now quite focused on that. We definitely foresee working from home being a new normal. So many companies have actually started declaring permanent working from home. So we can see that that's going to be a very new development. We have also, as part of our value-added services, we have introduced what we call virtual AGMs for our listed companies. So in other words, because of this COVID and when results were being announced, and by law, these companies had to actually host their AGMs, and they couldn't. We actually saw that as a gap in the market, and we started offering virtual AGMs, and that really had and we see that continuing in the foreseeable future. Also coupled with that is what we saw, the electronic post boxes, where now instead of you reaching out to your shareholders, we now can actually also do all that virtually, instead of now the physical delivery of your notes and so on. So those are the kind of observations that I'm seeing. Then, of course, innovations in some new product offerings. For example, we are busy launching a diesel contract very soon, I think in about a month and a half. But for the first time, this is a product which is actually a hybrid of a cash-settled product, but with an option for physical delivery. So we are seeing some of those, hybrids also becoming part of the new normal going forward. Thank you.
Yeah, thank you, Rafael. That was very interesting, really. Denise, so very briefly again, how you What is your expectation for the year end for?
Okay, as I just mentioned that actually it's not only the futures market, also the cash market in Taiwan both post very strong performance. And I believe as the virus, the impact is decreasing. Actually in Taiwan, everybody is now walking on the street and traveling a lot, and all the restaurants, everything become very active. So I would say that the futures market will continue to perform impressively till the end of this year. And also because, as I just mentioned, we have the real-time market data launched this year. So, and also the very active trading, after-hour trading, because the volatility is still high. So everyone is continue to use the futures market for speculative or hedging purposes. So as I say, I believe till the end of this year, we will have very impressive performance.
Great, great. Good to hear that. Good to hear that. Daniel, so it's your turn to share with us what are your expectations for this year.
I think also for Budapest and for the region definitely, but maybe it's true for the whole continent that volumes will be higher than average in Q4. I expect as well. So volatile times ahead of us again. Maybe not as sharp and maybe not as strong as we saw March and April, which was extreme. So maybe in terms of volumes and liquidity, it will not be as hectic as those March, April, May months, but definitely above the average. And in terms of performance, okay, so Budapest and the region is still some 25 30% down compared to the indexes compared to where they were pre-COVID, whereas we see some Western markets where they are already exceeding or the markets completely came back. So I think in terms of index performance, we might see further drops, but again, it's the region is still very much down compared to where it started and compared to some Western indices. So but definitely volatility for sure, and not much. We shouldn't expect primary markets to pick up in Q4 definitely.
Yeah, thank you, Daniel. Christina, do we have some time for one or two questions?
One or two, Constantine, one or two, because we are a little bit over, but I'm sure we'll catch up.
Okay, so I leave it to you just to pick the question. So
I see Rod is waving his hand, but before
yes,
Rod, were there any other questions?
Yes, please, Rod, because I don't see the chat, so please just raise your hand. Rod, please.
Go for it, mate.
Thank you. Greetings to everybody. I'd be very interested to know, in the economic downturn, did any particularly derivative markets experience any challenges in margin payments? Were margin payments met on time, and if there were problems, were there any remedial actions that were taken? Thank you.
So who wants to comment?
Anyone can.
Dennis?
Okay, can I say something? Maybe it's not the direct. For Target's own product, we don't have any margin payment things because it's the domestic product. But I would say for WTI, because of the negative price, and because we have some traders who trade CME's WTI, and that will have the margin problem. Okay, even though it's not TAFEX products, but because we will help our regulator to deal with some cases, some complaints. So actually, because of that, a lot of the margin, they couldn't meet the margin, and a lot of complaints and a lot of suits are going on domestically between the brokers and the traders because of WTI. I think that's the margin thing happening during these days. And I believe this is not only the case in TAFEX, in Taiwan, also some cases happening in other exchanges. I believe so.
Thanks. Any other questions?
Okay.
Rafael, you wanted to comment?
Yeah, no, I think from our side, we also didn't experience any margin hiccups. Everything went well.
Okay.
Same goes for Budapest. Relatively small. Our derivatives market is small compared to our cash market, and of course, margins had to be raised due to volatility, but they were met by all the local participants.
Great.
Are there any more responses to that from across the audience? Because if not, we'll move on. Okay. Just at this point, before I say thank you, even I will say thank you first. Oh, forgive me, Constantine and your team. Thank you to Constantine. From personal experience, it's not always easy running the first panel, and you've all done, all four of you have done really, really well. Thank you very much, and the overrun has been minimal. Thank you. Before we go to the next panel, I notice Maurizio has joined us from Mexico, yeah?
Hello, guys.
Hello.
Nice to meet you.
Maurizio, can you say hello to everyone as our new member?
Hello, everyone. I'm Mauricio. I'm CEO for Planet Agro. We specialize in agriculture futures.
Great. Paul, let me just wrap up the panel, and then we will go to another one, if you will allow me. just a final word. That will be very short. Thank you so much, panelists, and that was even. I noticed that we had even more topics to discuss and even more to hear from you, to get your insight and your experience. That was really good. Thank you so much. And with this, we will finish the first panel. Thank you, Paul.
Thanks, Constantine. Forgive me.
Thank you.
Back to Maurizio as well. We do welcome you here. You're in. I think you'll find that you're in a very familiar group of people in terms of what they do and where they've come from, and I know that I know you'll enjoy your time with us. Please, I will actually, on behalf of other people in the agricultural commodity sector, offer you all the opportunity to communicate with each other and with Maurizio over time, as I'm sure it's going to be great to have yet another American continent member in the AFM. Thank you.
Thank you.
Okay. So we move on to the second panel, and this is Chris Sturgis's panel, and I'm sure I know Brian's here, I know Clive's here. I haven't seen Terry, but I'm sure you're here, Terry. Chris, I'll ask you to pick this up and get things rolling for us. We've lost Chris.
He's very, very faint.
Chris, we're struggling to hear you.
Go into the same room as your microphone.
No, Chris, no. Wow. Can anyone hear Chris?
I can hear it very vaguely in the back.
Chris, if you can hear us, can you disconnect your microphone and reconnect it or something? Just something simple. Turn it on and off at the mains for 30 seconds. Whatever that old help desk thing was. No, compared to yesterday, it's as if you're never mind in a different room, in a different building.
Okay. So what I'm going to do is.
No. We can see you.
Perfectly. Yeah, we can see you perfectly now, Chris.
Oh, we were able to see you. Wow, talk about gremlins. Actually, shall we do the third panel first and give Chris time to sort his audio? I think we'll see what we can do. And actually, it's quite if the third panel, if patch panels hit all around, it's given the topic of the third panel and given Chris's problem just now, I think it's probably a good time to bring it in because panel 3 is about the future and particularly remote working. Let me hand over to Pat, and you can run on, and then we'll let Chris pick up when you finished with your panel, Pat. Okay?
How's that, everyone?
Right,
is that better?
Ah,
yeah,
better. Yes. When
Yeah,
in Africa, when you're in Africa, you always have a backup plan. It just means you have to hold the device instead of just keep it stand up. So
Perfect.
apologies for that. I'm going to quickly cramp up my volume. Is that much better, everyone?
That's much better, Chris. Yeah.
Yeah.
Let's go back to program. Chris, it's yours.
Oh, fantastic. Thank you and welcome again, Mauricio. I'm glad to have another member to the AFM. So very, very warm welcome to you. In the interest of time, really, I think today as the third panel, we've got excellent speakers. I can see Clive's face is there. Clive Furness, certainly from Contango Markets, needs no introduction. Always an out-the-box thinker, an innovator, and I'm expecting lots of conversation from you today, Clive.
How are you?
Fantastic. That's good. We also have Brian Brown from Euronext, a new face. I don't see you on my small screen now, but I'm sure you're with us. Brian,
yeah, I'm here, Chris.
Excellent. Brian, really, I think you've been with Euronext Consulting for the past 3 years or so.
Yeah.
Also, thank you again for joining our team. As we did through our dry run, this is very informal, and please feel free to keep the conversation. And if you disagree with anyone, let us know. And then we've also got Terry Ndesa from Kenya. Terry, I did see you join us a bit early on. Are you still there?
Yeah, I'm here, Chris.
Well, welcome, my African brother. I'm glad that you could join us, and really, I think let's keep the conversation going. We've got also, we'd love to hear our developments are going on the derivative side in Kenya. So a quick question, and I think Terry, you're on the AFM board. Clive, you've been to many AFM meetings. I'm going to hand over the first question to Brian as our newbie on the AFM panel. And really just ask Brian, so the topic we've got is what markets are best equipped for the future? Is it financial products? Is it physical markets? Give us your view.
I think, thanks for that. Thanks for going first. I think it's horses for courses. I think the gold standard in futures markets it all comes down to the purpose of the market, and the purpose of the market really is to facilitate hedging, and financial transactions come on top of that. But certainly at Euronext, we see our futures contracts as being absolutely to support industry and to support primarily real physical hedging purposes. So, our main contracts are physically delivered. And will continue to be so. In fact, we've just undergone the September delivery of our milling wheat contract, which has been a pretty huge delivery. However, it is difficult to launch physically delivered contracts. People you need to have expertise, you need to have logistics expertise, you need to understand the contract. So there is, in my view, there is absolutely a move from pretty nearly all the exchanges for their commodity contracts to move towards cash settled or financially settled contracts. And I'm sure we're going to come on to some of Clive's going to point out some of the difficulties and challenges around cash settled contracts, but they are easier to launch from an exchange point of view. They're easier to get participants initially interested in them, and particularly when a new contract starts and there's low liquidity, people can be very nervous about being left with an open position in a physically delivered contract if they're possibly not able to actually make physical delivery. So in my view, the gold standard for if you ask all of the exchanges, I think the gold standard for commodity futures contracts will remain the physically delivered contract. But more and more, the financially settled contracts are playing an important part. I mean, not just at Euronext, we're planning to launch a whole suite of cash settled contracts next year. If you look at the London Metal Exchange, they've moved into launching cash settled contracts. They struggled with a physically delivered steel contract when that first launched, and they launched a cash settled near equivalent of that, which has been much more successful. And they've recently launched a whole load of aluminium contracts. And if you look at CME, the Black Sea contract that they compete with us in Europe is a cash settled contract using Platts. And I think you've also seen, because of that, the growth of much more professional pricing agencies with the likes of Platts and the likes of Argus and the likes of Fast Markets. And I think Clive will come on to this for Clive, but I think key to a cash settled or financially settled contract working is how people trust the index that it gets settled against. So I'll leave that point open. But my in summary, I'd say horses for courses, and pretty nearly every exchange I know of is looking at both, and having that in the suite of arrows that you've got is to be able to have some cash settled and some physically delivered. But for us, the gold standard will remain physically delivered with additional cash settled. Is that useful, Chris?
Yeah, Brian, just perhaps just a quick follow-up question. You mentioned some cash settled products that you're working on for next year. Is there something you can disclose to our members?
Yeah, I think so. In fact, we've just done a survey of our clients. We're looking at 3 or 4 products definitely for next year. One, barley and durum wheat are 2 of them that we're likely to do. We've got to be very careful that those don't cannibalize our existing wheat contract. So we're looking at potentially launching those as basis spread type contracts. So they'll be priced possibly as this hasn't been confirmed yet. We're still undergoing consultation, but there'll probably be an element of pricing where they may well be launched as a basis spread. So priced in terms of with reference to our milling wheat contract, because what we don't want to do is launch a whole series of contracts and find that that pulls liquidity away from our main contract. What we want to do is provide solutions for areas where so we've had people come to us saying, look, German wheat, for example, we can't hedge the full risk of German wheat because it correlates to a degree of your milling wheat contract, but not fully. So one of the potential things that we're looking at as well is potentially launching, say, a German wheat contract that is priced at a basis spread from our milling wheat contract. So we retain the liquidity in milling wheat, but the small number of people who want a hedge in German wheat would then take out an additional trade in German wheat. So no, we're certainly looking at barley and durum wheat. There's potential other things that we're just starting to scratch the surface of. We've sent our members a survey where they're basically telling us which products they're missing a hedge in, and we're going to be driven by the market. But yeah, Chris, I think you're going to be seeing at least 2 and possibly 4 products from us next year. Cash settled.
Brilliant, Brian. Exciting times for you. Matt, your views on the market.
I mean, I sort of agree with Brian. I certainly do about the fact that the gold standard has been physical and it is difficult. But I sort of come back to the, because it's difficult, why is that a bad thing? Doing something because it's easy doesn't necessarily mean that it's right. The issue around indices and the basis for a lot of these things is particularly around the agricultural markets. The information out of the physical markets is simply not good enough to act as the basis for many of these contracts. And if you don't have a decent settlement and decent and trusted settlement basis, you're never going to get correlation. And once you lose correlation, it's done, and you don't get any more than one chance at that. So for me, I think the focus has to be on data. And if you're going to go down that route, we have to try and get the markets to change. And I given that we're now no longer seeing the banks involved in the commodity markets as much as they used to be, the merchants, the larger merchants, have effectively got control of the asylum. And I'm sort of concerned that they simply aren't interested in lit markets. They haven't had that. They just don't want people to know what their business is, and they don't make that pricing available. If we don't have that pricing, we're stuck. So one of the things that I think we need to do is to focus more on how physical markets behave. And I've been working on a product that is effectively taking physical contracts, securitizing them, and putting them together with a paired futures contract to deliver a new type of hedging instrument for commodities. So that's something that I've designed. I'm working with clearing houses to do it because I want the securitization and the collateralization to be held within trusted areas. But I just don't think we're being innovative enough. Yes, I fully agree with Brian. You need to launch products, but I just don't think as product developers we are being innovative enough, because design of these things hasn't changed fundamentally in 150 years. And I do think we need to think much more radically about how we design products to fit. If I talk to traders, their biggest problem is the fact that their hedges and their physical markets are uncorrelated in terms of cash flows. So what I've tried to do is to deal with that. And I think we as product developers within the ecosystem need to look at the physical markets and see how they relate to today's futures markets, because that has changed fundamentally over the last 20 years.
I'd love to be able to disagree hugely with you, Clive, but it's hard to disagree. So I would say that I think that having worked with some of the pricing agencies, I'm not quite as pessimistic as you are about the difficulty of getting prices always. I mean, I would say that one of the challenges we've had. I'll be blunt here. If you look at if you look at the exchange's own data over the number of contracts that actually work and the numbers that don't work, the numbers that get launched and get liquidity is actually quite small. I'm not going to name exchanges,
isn't it?
Sorry,
it's about 5%.
Yeah, it is. Yeah. Maybe a bit. I was thinking on one exchange, maybe 4 out of 22 in the last things that they've launched. I won't name the exchange, but they've actually worked. But it is low, and part of that lowness is getting both sides of the buy and sell side to be happy with having the light shone on the market, and I think that's all.
Doesn't that isn't that predicated by the fact that you have to have an incentive to cross the bid offer? If you're providing the perfect hedge, there is no incentive to cross the bid offer.
Yeah, no, I agree, and also a lot of people prefer to work in slightly darkened rooms,
particularly commodities.
Yeah, COVID's come to them as well, you know. So yeah. But I, having said that, I think that there are, the professionalism of the price reporting agencies has improved hugely. I don't know if that's due to some of the regulation that's come on, the BMR regulations or the IOSCO stuff, or whether that would have happened anyway. Oh, sorry, someone's phone's. But I sort of do agree with you, but then I would also say that I think that we've managed to find, we believe we're finding price reporting agencies who we've got a fair amount of a lot of confidence in the price. And absolutely, if people don't have confidence in a price reference on a cash settled contract, it is a disaster. And it will be a disaster. And you've seen it before. I mean, there's some industries, possibly the milk industry, where there's been, it's been difficult to get the reference right, but then they've made changes to it, and that has improved things. But I would say that I think the price reporting agencies are a lot better than they were, and possibly due to the BMR regulations and the IOSCO regulations, but also probably more likely just down to the fact that the organisations like Platts, like Argus, are a lot bigger than they used to. They've consolidated a lot more, and they're actually able to do things that maybe in the past price reporting agencies weren't able to do.
Mm.
So Clive, I was going to ask, the new product, I guess in the new markets you're looking at, does it include these price reporting agencies assisting, or is there an example you can take us through?
Yeah, I'm happy to. I mean, I don't want to Terry and the other, we need to sort of broaden this around. But essentially what I'm doing is taking a physical contract. No, it doesn't involve the reporting agencies. Taking a physical contract with the buyer and seller, lodging that contract within a clearinghouse, securitizing it so it's got a daily pay receive, and putting a paired cash settled futures contract in it that settles into the physical transaction at the term. Essentially, what I'm doing is reducing the risk down to the differential or the basis, as Brian was talking about, but without it being, but matching the cash flows. But I want to do that within a trusted environment. And can be done for any commodity, that's got a futures contract, and you don't have to be linked to the home exchange.
Sounds pretty interesting, actually.
You build the basis on that. Yeah. There's some good innovation happening in this space. So yeah, keep chatting here, guys. Terry, I just want to, if you don't mind, don't you want to share with us, first of all, just give us an update on things at NSE. How's your derivative market that you launched last year taking off, and where do you see then the difference between financial and commodities? Is there an opportunity for commodity products out of Kenya?
Thanks, Chris, and good seeing you guys, and that you're all safe, including Rod, who's busy taking a bite.
He's enjoying lunch.
Typical Rod. so we
got a milk check as well.
It's very important.
Yeah, he's excused because he needs some sugar in his system. It's allowed. Good to see you, Rod. We went live in July last year. We've traded about total turnover of about $1 million, I think. That's two-way. Activity is still pretty thin. Our average daily turnovers are about 2,000, 2,500 USD. We've done close to 1,200 contracts from launch to date. And we are seeing open interest gradually growing. We are happy with our risk models. We haven't had any instances where our models weren't sufficient to withstand any of the spikes, especially with the announcements of COVID. So we generally, on a process-wise, we are happy with everything. Our settlements are happening okay. Our trading and clearing members are able to do their relevant processes okay. Our main concern right now is to get the volumes up. We are doing slightly, we're doing lower than 100 contracts a day. Would like to ramp that up, which means that we have to get more and more players on board. Basically, most of the people participating, we've seen some HNI, high net worth clients, and mainly retail. So no, very little institutional flows yet coming on board, and so we are spending quite a bit of our time speaking to the local fund managers, the local institutional cash, to get them on board. That the schemes, the pension schemes here in Kenya are naturally very slow in onboarding new products. So even given with COVID and the volatility that came with COVID, we are seeing many of them not still taking up these opportunities to hedge their current portfolios. But they're asking the right questions. How do we do this? How do we process a trade through a custodian? How does a contract work? We're hearing the right questions. We just need to spend a bit more time, of course, and folks like Rod and Clive have been in these markets longer. They know it possibly takes much longer to get a new market on board with these products. So a lot of investor education on our end.
Terry, I've got a question on your market. It's something I don't know, and when you're talking to your brokers, how well connected are they to the international market? Because one of the things I found in doing work with some exchanges is that they've got a fantastic brokerage community, and this is true. It's true of some fairly large exchanges, but when it comes to the certain sectors, their community is not linked into the money flow in international markets, so they're not actually able to pull that flow. So it then becomes purely domestic build, which, as you found, is very hard.
So one of the things about Kenya is that based on frontier market status, which is what we are, then we mainly attract frontier funds, right? And many of these funds are buy and hold portfolios. We haven't seen the kind of hedge funds and that kind of activity that is in South Africa, for example, participating here. So the top 4 brokers easily have good connections and relationships with funds that have a frontier market sort of status. And one of the things we are working and pushing our government is to put in all the relevant pillars to ensure that Kenya gets into emerging market status. Then we are able to attract a new kind of bigger category of investors. So and then we can obviously get the bigger banks taking up membership directly here without having to go through the local intermediaries and that kind of thing.
Yeah.
So that's where we're at. We know that the top 4 brokers mainly have clientele based off London, the US and South Africa, and so of course there's a need to plug in a bit more bigger pool of market players who are able to tap even markets in Asia and the like.
Yeah.
Terry,
Sorry, Clive, didn't mean to interrupt. I was just going to ask one thing. One of the things that we've been looking at and trying to do and seeing in the other exchange, in some of the other markets, coffees and metals in particular, is that if you do have, talking about physically delivered contracts, if you do have a good link between the physical players and the financial players, and the exchange can provide that link. So, for example, with ICE, you've got the ICE Guardian system with warrants for coffee, and with LME, you've got the LME Sword system with metal warrants. And what those systems do is that they do provide this link between, the financiers who are happy to use warrants representing title of ownership as collateral for financing, and you've then got a ready regulated market in the exchange for selling those goods. So you do have this sort of virtuous circle that links in the physical players with the financial players and that kind of stuff. And certainly one of the things we were introducing is the idea of for our grain products is the idea of warrants. Representing title of ownership for grain to make the physical delivery process a lot easier. We've sort of not given up on physically delivered contracts. We think that, and this may apply to you in Kenya as well, the idea of actually having the exchange managing systems that manage inventory, bring in the financial players into a market that's regulated and can be a market of last resort for what they've been trading the futures contract on.
I mean, the LME tried that, didn't they?
Yeah.
Well, it's very successful. I think about 90% of their metal is actually under finance, and what they try to do, I think, is
only the sword stuff, though. Only the stuff.
That's right. But that's true, and they did bring in this other system to try and do it with metal with warehouse receipts, which I don't want to talk about another exchange. But I think that was just based on the fact that their sword stuff has been incredibly successful, and I think it's a harder push for people with metal outside of their exchange stuff. But I think certainly for stuff that you as an exchange are responsible for, having an inventory system that can facilitate both settlement of a futures contract and trade finance as well is something that quite a few exchanges find successful.
Yeah, I wouldn't disagree with that, but let me just I do think that we are then limiting ourselves to exchange deliverable stock as a trade financeable product, and the vast majority of product that trades isn't exchange deliverable stock and never makes it to that, even if it could be. Yeah. So one of the problems we face, of course, is the fact that trade finance is being, trade finance companies are withdrawing from the market, and I fear that what we face is a market where those companies, the larger companies who have access to what remains of trade finance, will further increase domination, and what we see down the line has a significantly detrimental effect not only on the medium and smaller merchant community, but significantly on the producer community. And if that trade finance doesn't extend down the line, the pricing control that the big merchants will have will be frankly abusive.
Yeah, and I guess that's really the opportunity for the exchange. That you want to provide that platform where the trade finance can come and be accessible.
And that's where my idea, that's sort of where my product idea came from, is to try and offer, because margin finance being one of the biggest problems. But I don't think we're in a marketplace where, as I say, commodities are beginning to diverge from the mainstream financial products. I think we need to think very carefully about how we're going to help them grow in the future. I mean, we talked about this the other day, but why haven't we seen a really successful origin producer-based, other than JSE and a couple of more domestic exchanges, why have we not seen an internationally successful producer country-based commodities exchange?
I think
what is the reason?
And Kenya is a classic case of a producer country, right? tea, coffee, and you know, we're a big player in that space, and flowers as well. But you find, you know, this if these markets in the individual nature have grown by themselves with you know, a whole string of folks who are not necessarily linked to other market players in different other producer or other financial sector players. So, for example, the coffee folks in Kenya don't necessarily have a relationship with the stock exchange or the tea guys. And you know, when you try and bring all
They
these
don't
guys,
have a relationship with anybody.
yeah, and you try and bring these guys together, and people have, you know, have concerns around their turf, and you stepping onto their turf, and they generally have a very you know, scared view that you're coming to take over, especially like in Kenya, where you have an exchange, the stock exchange, that has run much better in terms of governance and profitability and capitalization than the other entities. So the concern really, you know, and the thing, you know, especially in Africa, to get these markets to grow, or even to develop the trade finance, you know, markets, as you're saying, Clive, is really to get to a place where we can get the right political and economic drivers who are able to bring all these people to the table from an influence basis, and then, you know, they can then drive that conversation. You know, and this is the thing for how to get these markets moving forward, in terms, even like in Africa, you know, off Joburg, to just formalize these markets, get them ready to, you know, to get to a kind of level where then we're interacting with you know, with the global markets. Yeah,
I mean, I think you make a good point, and you're on a difficult situation, which is why I think it's incumbent on us as developers, you know, market infrastructure developers, product developers, to think very differently about the different geographies and the different environments that we live in. I think simply overlaying a Chicago model or a whatever model onto Kenya or Rwanda or South Africa is a recipe for disaster, which is why I think the JSE has been so successful, because it's done what it needed to do in a domestic environment. And I also would point to there's an exchange in Nigeria called AFEX. It's run by a lovely friend of Rod's and mine called Ayodeji Balogun. Came out of something that we did, what, eight years ago, started 8 years ago in Central and East Africa. They launched an exchange, but they didn't launch trading. They launched warehouses. They allowed people the opportunity to become comfortable with the warehouse receipt, to understand that the goods were safe, that they were the real thing. They got to the point where the market and the farmers accepted that, and then they moved on to offering a small level of securities, of traded securities. And whilst it's in its infancy, to me, that is the right approach. It was sympathetic to the region that they and the market they were dealing with. And I think we're often under a lot of pressure as infrastructure developers to, well, I want one of those, and one of those happens to be, you know, the big market that trades in Chicago, London, Paris, you know, Frankfurt, wherever. And that's just unrealistic. And we have to be strong enough to stand up and say, you can't do that. You can do something else, but you can't do that.
I think
start with the fundamentals. We just Brian, before you go ahead there, we are very mindful of times. I'm going to open up for questions, but and I know if Brian, we're going to come back to you now. Are there any questions out there?
Maurizio's got one.
Chris, I would like to to participate on this just 1 minute? If it's okay with you guys. Okay.
Perfect.
Oh,
So,
yes. Oh, yes.
okay. Especially because of the participation of Terry and Clive, what we're doing in Mexico is we are having fiscal contracts and we are tokenizing these contracts. So we have the farmers puts the collateral on a trust fund and then tokenizing it through today through Ethereum network. So this makes also the tokenization and the token available for all the participants over the world, which they can exchange on their own currency. So maybe you should look into that, Terry.
Yeah, that sounds good.
Yeah.
Well, we just introduced so I like to joke about that, you know, in Africa or in Kenya, we have a trust issue. We have a trust issue, so that if there's a contract law, no one trusts the contract law. So Kenya went ahead and did warehouse receipt regulations to, you know, regulate warehouse receipts, and it was passed sometime, you know, early this year, and so based on that, we still have to go around and you know, the government is still the biggest player in the infrastructure space in terms of storage. We still need to go around and convince farmers that, you know, you can literally deposit your produce and you'll be given a receipt. And one of the things that we have here is that, you know, we have a population that is very has moved quite well in terms of, you know, getting tech savvy in terms of using mobile money, fintech. It's moved very well here in Kenya. And so, you know, if we are going to customize or localize that solution, we have to be able to, you know, link that warehouse receipt to a telco, and you know, to a basic app or, you know, facility on the phones that, you know, your even your retail, your small scale farmer understands, and they're able then to transact or to, you know, to collateralize their receipt and that kind of thing. Yeah.
Can I butt in there, Chris, on this one? The
Quickly, please, Brian.
Yeah, just very quick. It all comes down to trust is the absolute big thing. I know when we've looked at warrant systems and I've been involved in a few for a number of exchanges, the key comes down to, does the person who holds the warrant, whether it's tokenized, whether it's electronic, whether it's piece of paper, do they believe that in the event of any type of default, can they go into that warehouse if the warehouse has gone bust? And can they go and pick those goods up? Can they believe that the goods are there? If you look at some of the things that have happened in China in the last, you know, where people have lost hundreds of millions, you've got to be absolutely certain that the goods are there, that you can walk in under any situation, even if, for example, the warehouse owner has gone into default because he owes money to the taxman, the government won't stop you going into that warehouse. And whether that's a blockchain solution, it makes no difference. You've still got to believe that the underlying law of that country, whether it's blockchain, token, this, that, or the other, that's only a technical solution. The bottom line, and this is why it's taken us 3 years to launch our EIM system. We've had to have a law changed in France to actually recognise what a warrant is, and that the French government can't stop you going and getting that if a silo owner owns the French government some money. And it's absolutely, and this is one of the problems with trade finance, it absolutely comes down to trust. It's not a question of technology, it's not a question of blockchain, it's not a question of whether you have a centralized system or a decentralized system. It's all about, does in Kenya, if you hold this warehouse receipt and someone else thinks they own those goods because they were pledged to them, can you go and get those goods? And if you solve that, you solve the issues. And because that's hard to solve, people say, oh, well, let's do a blockchain solution or something like that. But you've really got to solve the legal issues. So sorry.
Yeah, it's just changing the motorway, not the destination.
Absolutely.
That's it. So I trust it. I knew this panel could go on. When we were just working through this, we spoke for a good 45 minutes, and I know we could carry on for another hour at least. But I trust everyone has enjoyed themselves. I know we need to move on.
Can I just make a suggestion? is if this is something that AFM wants to do, we could easily do an hour and a half with a broader discussion group another time, specifically set up to talk about this, because I think there's so much more that we could discuss here. And, you know, given the experience that I see just on the screen that I've got here, I think there's a hell of a lot we could discuss. You know, we may come to no conclusions, but it would be good to have the discussion.
I endorse that.
Yes. Brilliant.
My microphone's on, isn't it? You can hear me.
Yes, we can.
Yeah, I endorse that, and I would ask one of you off Chris's panel if you can just do a scuzz around everybody who has been on the panel and throw back to us by email just broad outline topics, and then we'll find a diary slot and get it organised. It's a great idea.
All right.
Yeah, sure.
We'll mail each
Thanks.
other.
Yeah.
Brilliant. So I'm going to quickly do a thank you again. You know, what we would have typically done is now stood up, stretched our legs and gone for a coffee break and carried on with the conversation. But unfortunately, we'll just schedule another time and we'll do this virtually again. But thank you, gents. You've kept the conversation going extremely well. I really appreciate your time. Thank you.
Thank you, Chris. Thanks, Brian. Thanks, Terry.
Thank you, guys.
And that little comment by Chris segues beautifully into Pat's panel, which is about remote working. Is it here to stay? And the one thing that I'd like you to, if you get it into your discussion, is how do you facilitate the old, what was the old way of describing it, the water cooler chat, or the outside on the street cigarette chat? That they, for me, those ad hoc that at times can be really meaningful and important bits of chit chat are what's missing from remote working. I'll give it to you, Pat. It's yours.
Very good, Paul. Thank you.
We run a bit late, but you can run for 25 minutes or so. No problem. Okay.
All right. Great. Thank you. And thank you, Chris. That was a great chat. I knew it would be too. Great characters there. Anyways, yes, we're going to talk. That's one of the pitfalls, Paul, that you're talking about. Yeah. You can't be at the water cooler or outside having a cigarette. But okay, so this topic 3 is about remote working. Is it here to stay? Maybe not 100%, but what are the main areas where it might be most prevalent? And then we're going to talk about technology and how to support the growth of remote access and security. But first, my panelists, make sure that Pav, I see Arcella, you're there. I know Hello. It's early for you, wherever you might be. Hi.
I am in Colorado.
Oh, in Colorado. Wow. So I thought it was early. It's really early for you. Yeah. And Louis, you're there.
Yes, I am.
Yeah, great. Hey, Louis, let's start with you. If you would just kind of introduce and what you do, because I think it's important, because we have kind of a from an exchange, and then we have Keller, and then you're in the technology side. If everybody could kind of just take a second and talk about what you do, and then we'll just dive right into it.
Most certainly, Pat. So STT is a supplier of financial market software. We've been in derivative markets for a very long time, also in equity markets, and supply technology solutions for exchanges, CSDs, and various banks and brokerages globally. We've got quite a footprint across Africa, the Caribbean, and various other parts of the world, and that's what we specialize in.
Very good. Pav, would you come next, please? Or Arcella, whoever would like to go next, and please go ahead.
Okay, yes. Hi. Maybe. Okay, okay, Bobette Pavlic, hi, nice to meet you, everybody. I am a newcomer here, and I'm very happy and honored to be part of this precious team. I am representing the Hungarian Keller CCP. I am the new CEO and joined actually on the 12th of March. So you can imagine that actually it's kind of in this COVID situation. So it was, so to say, challenging, but I enjoy enormously. you know, maybe the Hungarian CCP, as it has been the part of this team for long, that we are for more than 20 years on the market, serving the Budapest Stock Exchange, who is also with us today. And we are also active as the CCP for gas markets and energy markets. So actually our licensing and actually products are not only on the capital market, but also there.
Great, thank you.
And I'm Araceli, and I'm representing Barofex from Argentina. Both exchanges were over 100 years old when we merged last year, and we list mainly agricultural and financial products. The main one is the currency product, but we've added single stock futures. We're launching new contracts this year, single stock future contracts and stock indexes.
Great, perfect, thank you. Okay, we're going to jump right into it. So, benefits of remote working. Who would like to start? Lewis, you want to start the same? Go ahead. Tell us what are the benefits of it.
We had a special situation where in November last year our organization had to vacate our office spaces and do a bit of remote working, and that put us in a very nice situation for a week where we could actually feel around and see what the environment is in terms of remote working. When the mandated remote working occurred, from an IT perspective, we were quite sorted. But I think the concern always is, and for companies that's been established for a long time, is what is the effect going to be on productivity if all of a sudden your entire workforce is not in centralized offices anymore? And it surprised a lot of people, and I think a lot of companies globally, that it actually worked out extremely well. We work on a productivity ratio where we monitor productivity continuously across various aspects of our organization, and our productivity most definitely increased due to remote working, and it was surprising, and we definitely from the beginning saw a benefit of remote working in terms of what we could produce, our work rate, and the productivity we actually put out on the floor. And it was surprising, and it was actually great to see. So from that point of view, it's a benefit. There's also various benefits as well in terms of people. We see people sometimes traffic, for example, in certain places are quite bad, and we see people not having to deal with traffic in the morning problems, which actually you find some people a lot more calmer working from home because they don't sit with those morning issues that continuously occur. And other people that, for example, had to leave at a certain point in time the office, that's now available to work longer hours and is actually enjoying it. So from a positivity point of view, that's the positive things we've seen, and it's actually been very good for us.
What are some of the other benefits? I mean, a benefit here today is that we have, as we can see, over 30 people from around the whole world that we're all together. And, you know, even when we have a live conference, a lot of times somebody can't make it for whatever reason. But here we get to at least see everyone. You know, that's a big benefit, I think. Pav, Araceli?
Yes. In our case, well, it's very similar to Louis-Jean's. The lockdown came overnight, literally overnight. And we are 230 employees in the company, distributed in 5 offices. And we used to travel a lot. So of course, in terms of cost, that had a huge good impact. And productivity also, human resources has been doing a wonderful job conducting surveys among leaders, members of the board, and employees. And in most cases, productivity has increased or remained the same. And at first, employees were a little lost because the communication is compromised because of the water coolers chit-chat in the hallways, right? So we have implemented talks with the CEO and different leaders via Zoom once or twice a month. which has helped to keep everybody informed of what's going on and new projects. And there have been several surveys among employees to see how they felt. And at first, in Rosario, because as you know, we have the offices distributed in 2 cities, Rosario lifted the stay-at-home order, and we allowed people to go back to the office, and only 15% went back. Now the stay-at-home order is back in place, and then the last survey they conducted concluded that more than 70% of the employees don't want to go back because they found that they have more time and more flexibility. And 30% didn't answer. Only 2% mentioned they would like to work from the office. Of course, we're talking depending on the task. We have a couple of people that go to make sure servers are working properly, but the transition has been abrupt and surprisingly good.
Thank you.
Okay, from Hungary side, just two sentences, because the colleagues said a lot of things which I think we all experienced as benefits and surprisingly good experiences. Also in our case, I have to say that the digital transformation and the initiatives that actually the colleagues, IT, and everybody immediately took and introduced surprisingly good ideas and, you know, tools which we didn't know before, or we knew but we didn't use, actually brought so many good things into the value chain. You know, so many procedures has been actually improved, became faster and easier, that it was really unbelievable. So in normal times, a project to really, you know, redefine workflows, to introduce these kind of tools would have been, I don't know, months. And now within 1 or 2 weeks, with actually all efforts of the colleagues, we introduced such a good tools to improve our processes that it was really unbelievable. I think just a very easy example, which I think all of us experienced, that for example, paper-based documents, contracts, and so on and forth, disappeared, I have to say. All of us have, for example, in Hungary, this NetLog, this digital signature with the, you know, identification card. The professional firm came to our office, everybody got the digital signature, and, you know, we immediately changed our procedures to digital contracts. And of course, this is just one example of this benefit, which I think is great, and we have to, of course, continue to use these and not the printed documents and contracts.
Yeah, thank you. My 2 cents, Louis, I agree with you, though. I think you have more time to be more productive when you're at home. You're saving money. I mean, I had 4.5 hours of commuting from where I live to Chicago every day, and having that time to be more productive and save money, those are all huge benefits to me. Anyways, let's move on. What are the challenges or pitfalls? There's quite a few, although I like the benefits better, but let's start with the pitfalls. Whoever like to start, please.
I would have a go. So there's certain pitfalls. Like everybody mentions the water cooler chat. I'll give you an example. We had a team that we placed in a section, their own section of the office, working on an exchange solution in the cloud scenario, which was a technology breakthrough technology they were working on, and I must say there are certain aspects of the performance and the being able to come up with ideas just sitting around a table chatting about it that can be quite difficult. It's a learning curve that has to be gone through to actually get to a situation where the team feels comfortable again, not sitting right next to each other, but actually sitting on teams like this and actually having a conversation and actually brainstorming ideas like that. So that's the challenges. Of course, there's other challenges, for example, that we face locally. For example, lack of internet access or bad internet access in certain areas. We do have a unfortunate power outage scenario. When you're all sitting in the office and have massive generators to keep the lights on, it's fantastic. But if everybody sits at home, sometimes keeping the lights on can be difficult for certain people. So that's, for example, examples of pitfalls.
Yeah, thanks. Would someone like to add to that, to the pitfalls?
Yes. So maybe Babette again. Yes, actually, from my side, I would say that there are maybe 3 areas which I would highlight here. So first of all, I believe that when we all immediately or in a very short time had to adopt to the new situation, everybody was focusing on maintaining the safe operations, maintaining the business as usual, and ensure that we maintain, of course, key projects and so on and so forth, but we were focusing only as is situation. I would say it is similar, like somebody is keeping the car in the lane on the racing, and just when the yellow warning light is on, you cannot overtake, you just stay in the lane and focus on keeping the lane. And we all know that for the long term and for the successful operations, we cannot stay in the lane all the time. We have to overtake, we have to be more productive, we have to maximize the engagement and the colleagues' productivity. And I think this is something where we as a managers are very important, because we can and have to somehow bring the most out of our people, even from remotely. And I think this is going over, so productivity and how we can accelerate in this situation and not just keep as is the working. So I'm coming to the second challenge, which is our people and our talents, because I think one thing is sure, that actually everybody is different. So in this situation, there were people who enjoyed and are mostly the new situation, and they became even more productive at home. But some people had family challenges to actually match the the working being and the tasks at home with the family together. There were people maybe in our teams who became lonely and actually suffered at home. So everybody is arriving into our teams with different experiences and different backgrounds and different approach to home office. So actually we have to somehow, as a managers, find a way to motivate everybody, to engage everybody, and actually be there to listen to our colleagues' needs and ensure that everybody finds somehow that mix of home working and the social networks, what is needed. So I think this is the second challenge. And third, I have to say that the technology, which we will probably talk in the future,
yes,
is a benefit, and we will talk about this as a next maybe question. So this is a challenge as well, because we have a lot of benefits from the new tools and technology, but a lot of risks as well associated.
Yeah. Anything more to that?
No, I was going to say we shared the same experience that have just been discussed. We are learning as we go here, and we have very few people working remotely before, and yeah, definitely the difficulty in communication would be the main one. And of course, we will talk about cybersecurity later, but that is also something we're all working on during these times. So it's a little soon to know the long-term pitfalls of remote working.
We have some hands raised. I don't know if.
Yeah, I think the biggest challenge. Oh, Rod, go ahead.
Thank you. Can you hear me?
Yes.
Yes.
A comment, if I may. For someone who hasn't been into the office for over 8 years, I guess I'm an expert at working from home. But I do think, being a huge proponent of eyeball to eyeball marketing, I have a lot of sympathy for guys like Terry, who's trying to start up markets without being able to get to the actual client eyeball to eyeball, I think is a huge challenge and very difficult. I think, as Brian said, if there's a virtuous circle where there's a lot of interaction, it probably is easier to look at financial markets than commodity markets in startup. But I would say that we would never have got where we got at SAFEX or the JSE without being able to do eyeball to eyeball marketing. So it is a downfall, I do think, and a huge challenge of where we are at the moment. Thank you.
I totally agree. I mean, the commodity markets from Chicago was all about trust right in a pit. You knew that you can make that trade with that guy, and he was a trustworthy guy, and the trade was good. It's all about relationships, still our business, and I think it always will be. And I'll tell the new young sales guy that comes in and say, well, I sent him an email or I sent him a text. I'm like, go see him, go have a cup of coffee with him, start a relationship. That's how relationships are made. So I'll finish with the pitfall, saying my wife would probably say the biggest pitfall is that I'm at home since March and she has to put up with me. But anyways, moving on. How can we support the growth performance-wise? I guess would be my next question. Lewis, you want to start it?
Clive, do you have a question?
Clive, I'm sorry. Go ahead. Yeah.
Sorry, I was interested. You touched on a couple of you touched on the sort of the personal issues that people have faced. How are you doing anything about ensuring work-life balance? Because there is a real danger, and I know this from I've run a company for 21 years. I sit in the same place and haven't changed since all of this happened. But I miss going out to see people, and I found myself increasingly being at this screen more and more and more, and I've had to really discipline myself, and I've learned how to do that. For somebody thrown into this, it's really, really very hard, particularly if they're a younger person that's got quite a bit of ambition or feels that they're under pressure for something. Are you putting any sort of safeguards in or safety nets around that sort of work-life balance?
Anyone? Yeah, please.
Very good question, Babette again. Let me tell you one example about myself. As I told you, I started on the 12th of March. And on the 16th of March, all the schools in Hungary were closed. I have two kids, 9 and 12 years old. My husband, myself, in the completely new position, as a CEO. So actually, I have to tell you, of course, it's a very special situation, but still, there was days when I got up at 4:30, 5 in the morning, just to really be ready with the cooking and, preparing for certain things, checking the online school task for my little one, who is only 8. So actually, and at 11 midnight, almost at midnight, I realized that I don't know how the day passed. Because, of course, I was not all the time in the course, but sometimes giving lunch to the family and things like that. But really, I didn't know what happened all day. And I was so tired, I couldn't imagine how I will survive. And you are very right that we have to somehow be disciplined. And after a while, I decided that every day I go 20 minutes running, just, outside alone, just to have fresh air and things like that. And a very good question, how we as employers can take care of our colleagues in similar situations. Because
it's almost as if you need to sort of make people schedule, effectively they're away from it. Almost the system is blocked to them for a certain amount of time. I mean, great that productivity is up and it's all fantastic, but it's not fantastic because actually it's hurting people.
And you will lose the people if they,
Yeah. Someone said that, they have one day, right, where there's no meetings. You catch up on all the other stuff that you should be catching up on. It's a good idea, and I think there's probably more ideas like that that we have to think about. Right now, Clive, to be honest, there's nothing like that we have in place. Everybody's you have your meeting, you have your team meeting, then you jump off, and then you jump on. And the only thing that helps is to have some of that downtime where maybe you go outside and you go for a walk or you do some exercise. and then you come back. And I feel things like that have helped me not feel cooped up sitting in my basement of my house where it's still not light out yet. You know, I mean, it's a weird feeling. It's not a good feeling, is it? It's a dark place, so to speak. Yeah.
To add to that quickly, this platform that we're all on now, Teams, has got nice tools which we actually use internally to manage that. So, for example, there's an interval timer on here that monitors how long people sit in front of the computer and actually working, and then actually can give them little tasks or little games to play to actually break that cycle. And they can also report back to a management perspective saying, you've got a guy here that's sitting 8, 9, 10 hours behind the machine, you know, he's not taking breaks. And then from an organizational point of view, you can actually step in and start managing that. Because that is definitely an issue that needs a closer look on, because in some cases, you know, working with a bunch of developers who sit in their parents' basement, they love working 16 hours a day, but you got to break that cycle not to burn them out. So fair point, but yeah, there's some innovative tools that has come out, especially Teams, I must say, has got some very nice tools to use that everybody can actually use to break that cycle.
Maybe we should go ahead, Paul.
Just only one thing I just keeps crossing my mind, and it's it's all these tools, all these, especially the monitoring tools. In the end, it all comes down to the psychology that the manager is using with his team. If you've got an overly micromanager, he will destroy that team as much as someone who's happy to let the team work 20 hours a day if they want. And it's probably easier to be destructive in a remote working environment than it is in an office environment. As something to be thought about, I'm lucky I'm out of that. I'm basically a little bit antisocial and very slightly lazy and more reactive than proactive. So this suits me down to the ground. It still gets done, but I think organisations have got a duty of care, yes, but a duty of care to make sure that the attitudes of the management team, especially middle management, is correct. And what you can get away with in an office, especially micromanagement, becomes very, very dangerous in a remote environment. That's all I've got to say.
Actually, that's a really good point, Paul. You know, the quality of management in terms of where we're going with the world it needs to be upped quite considerably. And I think there's a diversity angle to that, which is another discussion entirely. But you know, the same old middle-aged white men doing the same old thing isn't going to make a difference.
No, of course not. So there we are. Pat, sorry, we stole your panel.
That's okay. That's okay. No. And I know we're short on time, so I want to get to the stuff that I think is important here, and maybe we'll skip more to the technology stuff and supporting the remote. Are we at a place right now where we feel comfortable? I mean, we've heard the stories of Zoom and how Zoom got tapped in and people are saying nasty stuff on it and everything else. What about the technology part of it? If I can ask my panel to chime in.
I'm sorry, I was going to say yes. And at first, our first concern when all this happened, considering we had very few people working remotely, was if we were going to be able to support 230 people accessing the server at the same time. So that was the first concern. And then cybersecurity. And what the company did was create awareness and information for everybody on how to protect their computers. Not everybody had company computers because it happened so abruptly that some of us, like myself, I'm using my personal computer still. But little by little, the company has been replacing the computers, restricting access through VPN to certain areas of the company. So they have been working with each employee to see their needs, what they can access and what they cannot. And of course, this will take a few months. Fortunately, we haven't had any incidents, only minor little issues with internet, maybe at some locations, internet wasn't fast enough or good enough. But so far, we've had a very good experience.
Yeah,
Thanks.
I know
Also,
there's time limits on some of these. Go ahead, please.
No, I just wanted to reconfirm that actually also in Hungary, on the Keller side, the very first concerns or actions, I have to say, were about the virtual private networks, so the VPN licenses, that they were not in that number available at first hand, but we immediately subscribed. Our IT also rechecked, all these data protection and backup things from the remote working effects. And I think these were the must done. And to be honest, all these Teams, Skype and WebEx and all the virtual collaboration tools were first of all only working ex the VPN, so not in the VPN network, but outside. But actually for the time being, for example, the Microsoft Teams application is already now paid by the company, so it comes into the VPN. So I think there is a development and actions which we first immediately take to actually make the cybersecurity issues or ensure that we are safe, but there is a room to improve and there is a lot to do also as of today.
Yeah, and these companies are going to come back to us and they're going to raise their rates on everything because now they kind of have us, right? And you're already seeing that starting to happen with Zoom and everyone else, where they have a time limit. It's good for 20 minutes or 40 minutes, and then it shuts off. I don't know how many times I've been in meetings like that. Our company has stuck with Teams since the beginning, and we've had very good success with Teams, I think, overall. Let's I guess we're gonna we have a few more minutes. I know, Paul, and that's it. But the cost of remote being saved, the real estate. If we could talk about that maybe a little bit, and what you're doing, your companies are doing now that everyone's at home. Do you need that big office with all the space? Does somebody like to pick up from there?
Yeah, definitely. We have gone through an exercise of doing the cost analysis on that, and definitely you can actually have a massive cost saving from having a completely remote office. Little things, for example, do you really need, because none of us really need a massive server room in a basement anymore with all the cooling and the insurance costs that go with that, you can run basically your entire organization off the cloud and have all the advantages of that, which actually just helps your remote working a lot more. Another example which I can give, for example, is if, for example, we work across multiple time zones from Eastern United States time to Southeast Asian times, Central European times, Central African times, and having multiple shifts in the office to manage all our client support and that. But with a remote working scenario, you don't need it anymore because you can now use people on the ground in those various time zones to actually manage it for you. And because everybody's remote working, it's not like they are different from the organization, but they fit exactly into the organization. So in terms of situations like that and working on a cloud-based scenario, you can actually have a massive cost saving. And you can become a global company by the sheer fact that you are a remote working company. Your recruitment basis is now worldwide and not in the jurisdiction that you operate in.
And I'll just say one thing, for a small company like mine, that is brilliant, because we're able to have someone on the ground anywhere we want without any infrastructure cost.
Yeah.
And we're operating in 3 continents, so we're very happy with that in that respect.
Yeah.
Yes, maybe I fully agree. So I think we all experience that remote working is working. We, of course, as a managers, need to use all these technical collaboration tools and performance management tools and all our, skills to motivate and engage people. But I fully agree that we can reduce the physical presence and then the physical office space. However, just one more comment, which I think important, and we all have to remind ourselves, that if our companies are at least partially remaining in the office, like such back office activities, the IT who is operator and opening, closing, and so on and so forth, we will still have some office. And I think the challenge is that today's workplace is not created to mitigate actually diseases. And we are not sure how long the COVID will, or other viruses or other similar happenings will come. And I think we have to rethink how the workplace looks today, because I think we all know that in the recent years, every office developed in a way to support creativity, innovation, agility, cooperation, and so on and so forth. So this means that we have, open space, high density of desk, spaces to support cooperation like sofas and, these things. And these office spaces now actually are a problem, because we need to separate people, limit interactions, have space between the desks. So I think if we say that this kind of diseases and the virus is with us and we have to protect those people who are in the office, we have to rethink the workplace, and this is cost. So on the other hand, there are also some investments and rethinking we have to make.
Up and down.
Yes, ups and downs, in my view.
One thing I would throw in is, and I'll go back to Pat because we've probably got to finish, but is once we are in a position where, let's say there's a vaccine and it's early next year or whatever, and the ability to go back to the office is there, but let companies make a decision. And if a company decides to keep remote working as a strong option, when it's safe to do so, don't forget the benefit of the social interaction between the staff, and have at least, well, I say at least quarterly, I would actually say at least monthly, get everyone back in one place, even for a couple of hours when it's safe to do so. I think that would be a fantastic boost to the staff morale in the first days. Yeah, that's
great.
Any comment?
Yeah, I know one.
Again.
Yeah, and from the exchange side, I mean, there's certain jobs, and we're going to get into this, but I know we're out of time. But we're talking about clearing, right? And there's certain things that you can't do remotely. There's certain things you have to be there for, and there's so many.
I don't know whether I agree with that, Pat, actually, because I was talking to the guys. Sorry, but I was talking to the guys in Dubai who've run a clearinghouse totally remotely for 4.5 months.
Really?
Yeah. Nobody was in the office, but I mean, I accept the point that traditionally it would have been that way, but I was surprised as surprised as you. But this last Monday I was talking to Les. So I think we sometimes put barriers up because that's the way we've always thought about it. But I do think we're challenged now to be completely different and completely radical. And those people that would say, oh no, you have to go back to the City of London because the City of London's a great place. No, it's a den of vipers. We don't want to go back there.
Yeah.
On that note, that kind of goes back to how I started the whole meeting about change and how nobody likes change, which is true. But I think that, first of all, thank you to my panel, our roundtable. Great job. I know we could have gone on and on, just like the last one. We could have gone on and on and on. But I think, Paul, overall, as your newly elected chairman, again, thank you for, boy, what a great day. Very informative. Great to see everybody. And I'll pass it back to you, Paul. Thank you.
Thank you, Pat. Thank you, Pat's panel. Thank you, other contributors. Welcome to new faces, and good to see old ones again. And old, that meaning people I've known a long time, and not just Rod. But the time lag was sorry, mate. And thank you, personal comment. Thank you to Lujan for taking the other picture he had behind him earlier away. It was painful, and he'll know what I'm talking about. Thank you very much. The best part of 30 of you that were here most of the time, and the 20 odd of you that are still here now. And he's put the painful picture up again. For those that don't know, that's South Africa after they beat England in the World Rugby Cup final last year. Oh, that hurt. So thank you very, very much for coming and for contributing and for continuing the AFM story with us. We will meet again. We will meet again online, particularly on that product panel, which I think will be really fascinating when we get into depth on it. And we will meet. We will meet in person, I hope, next year. So thank you all. Have a great weekend. Goodbye for now.